Citadel's Ken Griffin. He is calling the president's tariffs a huge policy mistake. In a quote, he spoke at an event in Miami yesterday and warned about the impact to the middle class. We're going to now bring in Bloomberg's chief hedge fund correspondent, Nishant Kumar, to talk more about this. You know, I actually had the first real interview with Ken Griffin in the wake of the election. He said that at that time that tariffs would lead to crony capitalism. Now he's calling it a huge policy mistake that will take a tax on the middle class. How widely spread are these views? What's interesting to me about Ken Griffin speaking in Florida is, of course, that is close to the other center of power in Florida, which is, of course, Mar-a-Lago. Do the people around him share this view, or is it controversial?
Well, it's increasingly becoming the consensus view, it seems, especially among the billionaire fans of Donald Trump. I mean, they are probably having their oops moment right now. Few expected him to go through this sort of a policy and engage in this sort of a Twitter or X war, sending messages every morning and causing volatility in the market. So for sure, like Bill Ackman is one of them who came out and said that he did a mistake and he doesn't. I mean, the tariff will cause economic nuclear winter, in his words.
So Nishant, when people close to the administration or close to the GOP, and I understand that Griffin is not a donor to Trump, but obviously, he's given $100 million to other Republican candidates and causes. Can you say that that their criticisms are based on losses? For example, Ackman had a big investment in Nike, right? Or Musk, obviously has big investments in China. And so Trump allies are saying, hey, they're just being critical because they're losing their own money. Is Ken Griffin losing money based on the tariff policy that went into effect on Saturday and what's going to go into effect tonight?
Well, Ken Griffin hasn't lost money. His investment firm was flat almost last week. It lost just 35 basis points. So in his case, especially, it doesn't seem to be driven by the returns itself, but generally its view on the economy and how the tariff policy is really starting to affect the economy, the chances of a recession in U.S., and of course, the stock market and asset prices melting.
And, I would say we don't know the numbers actually for the first quarter for Citadel Securities, but given the volatility, what the bank's trading desks do, I'm sure will be a good barometer of how well they're doing. Nishant, I want to kind of knock down the notion that all hedge funds are failing or all family offices are failing in this environment. You are out with the headline of Michael Platt's Bluecrest just soaring. Bridgewater, at least through March, was really up double digits, close to double digits, if not more. Schoenfeld is up. Who's benefiting in this environment?
I mean, really, Michael Platt making money during episodes of volatility is not news anymore. Like, he does it all the time. He has this amazing money printing machine. I mean, look at his returns. It's annualizing at 30-40% since he returned capital to investors. The key behind his stellar performance is, of course, mountains of leverage. That's what makes it trade click, and that's why he makes so much money. But generally, if you look at multi-strat world, I mean, they have fared, considered really well. I know zero is not a number that one celebrates when it comes to returns, but essentially, if you were flat last week, that was a remarkable achievement. And we see that across multi-strategy hedge funds. Schoenfeld even made some money. Citadel kind of flattish. Millennium minus 70 basis points. Balyasny flat. So these are some really solid numbers at the time of this market chaos.